What's in President Biden's executive order on digital assets? Digital assets have become increasingly popular among individuals and businesses. Between 2017 and 2021, the cryptocurrency market saw a market cap increase from $14 million to $3 trillion. More than 100 countries have started exploring central bank digital currencies, CBDC, a digital version of a country's official currency. Although one of the main features of digital assets is that they are decentralized, meaning a governing body does not control them, the U.S. government has found it essential to examine their impacts on the economy, consumer protection, national security, and climate. In March 2022, President Joe Biden signed an executive order outlining the government's approach to addressing the risks related to digital assets, as well as strategies to develop a framework to harness their potential benefits. The order is a call to action for practices that ensure responsible innovation and healthy competition with digital assets. It also calls for more research into the potential impacts of crypto assets on the economy. The executive order lays out the country's policy for digital assets across several key areas. The executive order calls for the protection of U.S. consumers, investors, and businesses in the face of the growing risks associated with cryptocurrencies and cybercrime. It directs the U.S. Department of Treasury to examine how digital assets can affect financial markets and develop policy recommendations to ensure that regulators have enough information to guard against systemic financial risks posed by digital assets. The order directs the Treasury Department to work with other agencies such as the Labor Department, Consumer Financial Protection Bureau, Federal Trade Commission, Securities and Exchange Commission, and federal banking regulators to draft a report analyzing the financial markets, payment systems, and other consumer behavior regarding digital assets within 180 days. The order aims to protect U.S. and global financial stability and mitigate systemic risk. The executive order directs the Financial Stability Oversight Council to examine the risks posed by cryptocurrencies and digital assets to the economy and provide policy recommendations to close regulatory gaps. Next, the executive order calls for mitigating financial and national security risks posed by the illicit use of digital assets. It directs government agencies to collaborate efforts and focus on mitigating risks associated with the illegal use of digital assets. It also encourages increased cooperation with allies and partners to ensure international frameworks, capabilities, and partnerships are aligned to combat these risks. The executive order seeks to ensure the promotion of U.S. hegemony in technology and economic competitiveness, to reinforce U.S. leadership in the global financial system. To achieve this, the Department of Commerce is directed to create a framework to drive innovation and competition in the digital asset economy. This framework will subsequently serve as a guide for other agencies who can incorporate it into their policy, research and development, and operational strategies for digital assets. Another priority outlined in the executive order is the promotion of equitable access to safe and affordable financial services. The order acknowledges the need for safe, affordable, and accessible financial services, especially for communities with poor access to such services. The executive order directs Treasury Secretary Janet Yellen to collaborate with other agencies to produce a report within 180 days of the order, centering on the future of money and payment systems in the U.S. The report also includes implications for economic growth and inclusion, national security, and the extent to which technological innovation may influence the future of money and payment systems. The executive order calls for the support of technological advances and ensuring responsible development and use of digital assets. It directs the U.S. government to take steps towards studying and supporting technological advances in digital assets, regarding privacy, mitigating climate risks, and preventing the illicit use of digital assets. The order directs the Office of Science and Technology Policy, the Energy Department, the Environmental Protection Agency, the Council of Economic Advisors, and the National Climate Advisor to work together on a report on the impact of digital assets on climate change within 180 days of the order. Lastly, the executive order calls for the exploration of a U.S. central bank digital currency and research into the technology required to support a digital dollar. It does not explicitly endorse a digital dollar, but acknowledges that research into the benefits, risks, and technology required to launch a digital dollar are necessary. What does all this mean for digital assets? President Biden's Digital Assets Executive Order is a step towards ensuring that the dollar remains a top currency, and the U.S. remains a global leader in technology and finance. Digital assets are taking over business transactions, and when used properly, they have the potential to simplify and secure financial transactions. The executive order seeks to avoid the risks associated with digital currencies while promoting research into the technology involved in creating and managing them. We hope you learned something new in this video. Please hit the like, subscribe buttons below, and share this video. If there's a topic you'd like us to discuss, let us know by leaving a comment below. Until next time.